that we are finally getting our first digital currency. Now, just be careful. It's going to be so exciting. I'm sure every one of you can't wait to get it right now. By the way, feel free to, we are live streaming on Facebook, YouTube, Twitter. You can hit me up in the comments, and I will absolutely be going back and forth with you, chatting about whatever's on your mind. Let me just double check the stream health. Yep, good. Okay, good. And you know what? I don't know what. Not good on this one. So, tweet. Let's see. One thing, please. There we go. Cool. So, anyhow, feel free to comment anything that's on your mind. We will absolutely chat with you in the comments, any stocks, any news you may have heard. But again, let's celebrate. It is the first day of FedNow. Here's according to Reuters, Fed launches long-awaited instant payment service modernizing system. It is going to be so exciting, you guys. You're going to deposit money and you can instantly get it. Aren't you so excited? This is just going to be, it's going to be, I can't think how awesome this is going to impact everyone's life. I just hope that nobody has a wrong thought or a wrong opinion or, finds themselves at an unsavory location, or maybe you spent money on an unsavory thing, or perhaps you posted something on Facebook that 5 years ago was very common understanding, 10 years ago very common understanding, but today it is very, very not in vogue. And then all of a sudden, FedNow completely restricts your access to your bank account. So that would never happen, and that's conspiracy, and we absolutely should not even entertain those ideas. So anyhow, enough with this. Happy birthday to the Federal Reserve launching their long awaited by who? Not by a lot of people. Long awaited by the Fed and the global bankers who would like to have absolute control over how the money supply works. So anyhow, that is a big deal. We'll see how it develops. Honestly, I don't expect anything really crazy in the next few months or maybe even year, but we will see. What will be very interesting to see is what happens if, if there is another big stock market crash or something like that, or a major global economic event like what happened back in 2020 with COVID and all that money that went around. But we'll see how this pans out. I think, yeah, I think I know kind of what's going to happen. I think you probably know how it's going to happen, but regardless, here we are. We'll see. I know that it'll be interesting to see what happens in the next presidential election, because Robert Kennedy Jr., who is running for the presidential nominee, he actually just announced that he is not a fan of this, and that he would like to see the U.S. dollar be backed by something like gold, or even he said he's even open to considering Bitcoin, which would be an interesting development. But if you back the dollar by gold, that would completely torpedo this whole crypto CBDC that's launched today. And I don't think Trump, who's running, has said anything directly about FedNow, but I know that a lot of the people like Steve Bannon and his circle are very much against it, and he probably would take their counsel. I don't recall hearing anything from the Joe Biden team or any other politicians running at the moment. But regardless, you guys, we have so much crap we're going to cover today. We've got, let me just see here. Let me close this. A few economic data points that I'm going to go over with you. We are in the middle also of earnings season right now, hot and bothered earnings season, in a stock market that, as you can see in this tweet here, is just nothing but up and to the right. I've got a lot of earnings on, let's see here, Disney. We've got the banking sector. We have Tesla. We have Apple, although they haven't announced, but something developed with Apple. We have Netflix, IBM, Discover. There's some bizarre stuff that all of these companies have been saying this week during their earnings calls, so I can't wait to go over that with you. Also, the Russia-Ukraine drama, as I call it, just because it is. I don't even know what to make of it anymore. It's just a drama, but it is developing. Russia is no longer, maybe 6-9 months ago, they agreed that they would let Ukraine export grain, and the grain coming from Ukraine is massively important around the world. They export so much. However, because the bridge to Crimea was blown up and they're 99% sure it had to do with Ukraine and their allies, Russia has announced starting today or yesterday that they will no longer guarantee safe passage of that grain. We'll go over that in just a second because that is developing extremely quickly as well. We're seeing commodity wheat prices spike. And then more crypto drama. I love it because, as you guys know who have been watching, we have been talking about this for months. That even back as far back as last fall, almost a year ago, watching what was going on with FTX and the guys at FTX kind of implode. So we will go over all of those various topics. Let's start off with this tweet that I've got right here. Let me pull back. Okay. Yeah, so here is a the stock market. What an interesting, weird machine it is right now. So here's a tweet. It says, "You cannot make this up. The S&P 7, a handful of technology stocks, is now up an incredible 58% this year. Meanwhile, the remaining S&P 493 is up just 4%. AI hype and tech stocks are literally holding up the entire market. Markets really believe AI is the next big thing." Okay, so regardless of AI, what's very, very bizarre is last year pretty much every company out there, whether it was retail or grocery stores or automotive or tech, whatever, they were all saying a very similar story, saying, hey, look, our consumers are tapped out, inflation is causing them to really cut back, so on and so on, interest rates, so on and so on. With that said, though, they're now, something has happened, and don't ask me, but this calendar year, these 7 stocks, Facebook, Amazon, Apple, Microsoft, Google, Tesla, and Nvidia, those 7 specifically have exploded so hard that they are literally holding up the whole S&P 500. So the stock market as a whole this year is up about 15 or so percent this year. But of the S&P 500 that's up 15, about 493 of those stocks are not even up more than about 4% on average. Of course, you've got some that are up 8, some that are up 10, what have you. But what's bizarre is that these 7 stocks, all of which last year, Amazon last year, down 50%, Apple down 30, Facebook down 50, Microsoft down 30, Google, I think they were down about 40 or so percent, Tesla, Nvidia, both down like 50, 60%. I don't ask me. I honestly cannot tell you. All I can tell you is that right here, you see this little spot right here? This marked the last quarterly earnings phone calls where these all of these companies, all they said, they didn't say, they stopped talking about weak consumer, they stopped talking about interest rates, they stopped talking about inflation and so on and so on, and all they said was AI, AI, chat GPT, AI, AI. And since then, their stocks have just rocketed upward. So that was a very interesting little data point there for you to take home. Also, a very interesting data point for you to take home. Credit card delinquency at small banks passes 2008 and COVID levels. Amounts owed, of course, are much larger. So this is a guy who's got a great Twitter page. He puts out a lot of great data. If you ever want to follow him, Peter St. Onage, I think, I don't know. But according to the New York Fed Consumer Credit Panel here and Equifax, this is the total outstanding credit card balances 1999 to present. That does not look like a sign of a healthy economy. Although, let me go down to the comments here. Some people will also come back and say, yeah, but the value people's I'm trying to see. Usually a lot of people throw this chart in the comments, but I don't see it. Anyway, a lot of people will push back saying, yeah, but the average homeowner's net worth has increased a lot as well, so they can afford it. Hey, maybe they can, maybe not. But when you have a credit card balance that's this high and interest rates have not been this high since 1999, if I remember correct. Well, I shouldn't say that. Interest rates were this high briefly, but interest rates right now are extremely high. So that kind of credit card debt is very, very unreal. And to add to this little data point here, you look at what he was actually retweeting. It says credit card loans 30 plus days late to small banks recently hit 7.25, an all-time high. Consumers are wearing thin. Won't be long now. So he not only are we seeing credit card balances spike massively, but also the number of people who are late on their credit card payments, which you know what happens, just compounds and compounds, that's starting to spike. And it looks like it hasn't been that high since right here around COVID. Regardless, that is a data point for you to chew on. What do you make of that? Tell me in the comments. Let me make sure the stream health is good right now. Yes, Facebook Live, good. YouTube Live, good. Twitter Live, all right, looking good. Okay, now here's another little data point for you to take home on some economic updates. Not a single market correction since this liquidity program was introduced in March. It also marked the day of the March lows. What is this program? What is this program? Well, if you remember back in February and March when various banks like Silicon Valley Bank went insolvent in about 48 hours, the U.S. government created a new program called the Bank Term Funding Program, BTFD. What the heck is BTFD? It's a bailout program to keep the banks from going under. Now, back when they created this, they said, all right, we're doing this just to stabilize things. We're not going to do anything crazy. We're not going to, just bail out the banks. We're just making sure the markets are efficient and all that good stuff. We're only going to put $25 billion into this program. And you can see that 20,000 mark. That's 20 billion right there. So that blue line, what does that blue line represent? Well, that represents the number of dollars being issued and given to regional banks to keep them afloat. And if you guys can do numbers like I think I can, that number is not at 25 billion. That number is way over 100 billion now. And that is correct. The Bank Term Funding Program, which was created back in February and March with a limit of 25 billion, has already had the limit raised from 25 up to 100 billion. And you don't really see anyone talking about this. You don't see this on the nightly news or in your newspaper much, do you? But it's very interesting that at the same time, like this guy on Twitter says, there has not been a single red day in the stock market since this has come about. Very interesting data point for you to chew on. Another little data point that has come across, and I'm sure if any of you are watching the stock market, you have to see this. I've gotten many calls in the last couple of weeks saying, hey, I think it's time to get in. I think it's time to buy, let's buy NVIDIA, let's buy Google, this kind of stuff. The fear and greed index is saying that we're not just greedy right now, we are suffering from extreme greed. People are extremely optimistic, throwing all their money in. And honestly, you guys, when I see the U.S. manufacturing orders dropping for, 8 months in a row now or 9 months in a row now, when you see that credit card balance and the credit card defaults spiking like that, when you see interest rates pricing people out of wants and having them focus on just needs, when we're looking at the jobs reports and every month it comes in amazing, but then 2 weeks later they're revised negative, showing that jobs are not only are they not getting better, but it's showing that a lot of people are actually taking second jobs, that a lot of the jobs are just new government jobs. And then finally, and I think we've gone over this, but I'll do a special video on this exclusively, a lot of these jobs in these job reports aren't even going to American citizens. They're actually going to foreigners on H-1Bs or assumed illegal immigrants. So anyhow, we'll go over that. So take this data point for what it is. Let's see here. Yes, here's a fun data point. We did that video on BRICS the other day, remember? Well, I told you guys, hey, you know what? This could really be a serious competition against the US dollar, but I'm not so optimistic yet. There's a lot of details to hash out. And then it was like 2 days. Let me see. It was like 2 or 3 days after that video that I put out. Breaking. Russia is not comfortable holding rupees, which is India currency. It wants to be paid in Chinese yuan or other currencies. A second Indian government official involved in the discussions said. And what's going on here now is that India and Russia are butting heads on BRICS, and India is about to back out. If you read, there was another article that says essentially India is threatening to back out now if they're gonna be kind of discriminated against in this whole BRICS agreement. So again, there's so much detail to figure out in this BRICS thing. While I think it could absolutely happen, and honestly, it most likely will, I think that there's a lot of details to iron out, but time will tell. Okay, let's get into some earnings. Let me see here. Disney. I want to tell you about Disney right now. Okay, and let me drag that back there because that goes along with the banking stuff. Let's see here. Okay. So let's cover Disney. And now Disney has had some very bizarre stuff. They've had what is it, 8 movies. Their 8 most recent movies are just absolute bombs in the box office. They are just tanking. Nobody wanted to see the Little Mermaid remix. The remix that they're making right now of Snow White looks like it's going to be a total bomb as well. They've had a few others. There was an animated movie. Gosh, it wasn't. Was it Emotions? But anyway, check this out. Bob Iger of Disney put roughly a third of the company up for sale this week, per Bloomberg, declaring Disney's linear TV assets non-core. That includes networks like ABC, FX, and Freeform. Recent reports have highlighted Disney's exploration of options to establish a joint venture for its digital and TV business in India as well. This business segment includes the popular Disney Plus Hotstar streaming service and Star India. So wait a second. What? Disney's trying to offload their entire television and a lot of their streaming. Well, we know that that's very capital intensive to make that work. Um, okay, so this is from CNBC, where they go into a little more detail. He says right here, the CEO, after coming back, I realized the company is facing a lot of challenges, some of them self-inflicted. Yeah, that's kind of accurate. He says they may not be core to Disney. So right here, he says Iger said that when he had left the company, he had predicted the future of traditional TV and had been very pessimistic, and has found since his return that he was right in his thinking, adding, "It's worse than he expected." When Iger last spoke with Faber in February, soon after announcing a major restructuring at the company, he said he felt a sense of obligation to return Disney and that his return to Disney, and that his preference was to stay for his 2-year contract. Quote, "We've gotten a lot done very quickly, significant cost reductions and significant realignment of the company," Iger said, but dealing head on with some of our biggest challenges. And some of his biggest challenges is how junk TV is right now. And here's actually, I wanted to read you the top comment because I agree with it. Honestly, sounds like a good idea. Focus on movies, parks, Disney Plus. And honestly, that's what everybody wants out of Disney right now. Um, Unfortunately, like I said a second ago, their last 7 or 8 movies have completely bombed, and I mean like lost money almost every one of them. But then add here, Disney pulling back on making Marvel and Star Wars content. So that's like some of the biggest stuff that they have to boast about when it comes to Disney Plus. But again, we'll see. Time will tell. I actually had, and I forgot. Not only that, but there was a tweet that went viral. Why Disney World is so empty this summer. There was someone at Disney World, California, and they had taken a couple of pictures, and it was, now for those of you who have been to Disneyland or Disney World, that place is shoulder to shoulder with like 2 hour long waits at every ride. But this was there were people there for sure, but it was not overwhelming. And then there's a website where you can check the wait times for various rides at Disney parks, and they were like less than half or less than a third of what they normally are. Massive cut in demand for Disney. So with that said, let's just have a quick look here at Disney stock as we are considering Disney and their earnings in the stock DIS. Oops, nope. DIS. Let's have a quick look here. They have earnings coming out here in about 2 weeks, so we'll do a follow-up. But just so you guys can see how Disney is doing, revenue is still up and to the right. Their free cash flow, however, is terrible. It has dropped off a cliff since 2019. Earnings per share, again, dropped off, but coming back. They still got dividends, but this is concerning. They have a lot of cash, but also a ton of debt. Even though their debt is coming down a bit, they're really going to have to, and this probably makes sense why that the CEO Bob Iger is saying things like, "Hey, let's just start selling off things that are not that great for us." And if you guys didn't know, Disney owns like a ton of stuff. And also right here, this return on capital. This basically means at the end of the year, when all's been done and the dust is settled, how much did you actually have left over at the end of the day to reinvest, whether it's dividends or new investments and new ideas and new movies and whatnot. And you can see 2013 to 2018, they're looking great. In fact, really healthy when they get above like 10 to 15%. They're 16, 19, 18. Now Disney's way down here in the single digits. So I could see where the CEO feels like he's got a lot of work ahead of him. So, anyhow, let's move on to another company here, Apple. Did you guys see what happened with Apple stock the other day? All right, so this is unreal. Apple, this one little headline right here started all of it. Apple races to develop own generative AI tools to catch OpenAI. So basically, they wanted to create their own Chat GPT type of thing internally. Maybe it's Siri, maybe it's what have you. I mean, they have all sorts of various things they could use it for. That tweet right there, that little press release right there, cued in a surge in Apple prices, which let me see if I can show you. They were up like 5% or something like that in a matter of just minutes. And then let's see. It was like, yeah, it was like right here. They're just, I forget, but they absolutely spiked. And then Zero Hedge covered this so closely. And this little Twitter thread, this little, rapid fire of their tweets is hilarious, where they say, this is the breaking news because clearly, otherwise, we wouldn't know that the world's largest company is working on developing the world's hottest technology. So Bloomberg just says here, Apple is quietly working on AI tools that could challenge those of ChatGPT and Google and others, but the company has yet to devise a clear strategy for releasing the tech to consumers. And then Zero Hedge says again, to summarize, Apple just gained 60 billion in market cap because they report it is working on what everyone else is working on. Zero Hedge follows up, and let me zoom in for this so you guys can see this a little better and read along with me. If you actually read the Bloomberg report, quote, Apple employees say the company's tool essentially replicates Google Bard, ChatGPT, and Bing AI. It doesn't include any novel features or technology. Good enough for an instant 60 billion spike in market cap, though. And then again, Zero Hedge on it. NASDAQ 100 quickly falls, briefly turns negative, and then they follow up. Apple copycatting ChatGPT is apparently negative for value stocks. And then I think they end the day because as I was watching this, I was kind of laughing. They were just hammering this whole thing. They write this article: Apple spikes to all-time high, gains 60 billion in seconds on report. It's working on its own Chat GPT. So this is kind of, you can see this visual here, but not just that. Adding to this guy Sven Heinrich, I believe he's a Swedish guy right? Swedish, Nordic. I think maybe Norway. He tweets out right about that same time. In the meantime, now this is a very interesting chart for you who are technical traders. Apple, 3 trillion market cap included in over 500 ETFs, new highs on daily negative divergence in an extremely tight channel, 25% above its daily 200 moving average, and a forward PE near 30, trading 8 times sales. He's kind of illustrating here what's going on in Apple stock. And for those of you who are technical traders, you know that this shows you should expect the stock, once it starts seriously hanging out above this line up here, that it should start pulling back greatly. Same right here. Once it starts really getting high and strong up here on this top side, you should expect to see it pull back. Now, how much would you expect it to pull back? That's a great question. If you look right here, where he actually circled the last solid top, Apple stock was at roughly 175, and then when it bottomed out and turned up again, it dropped to 122. So you guys do the math on what kind of a percentage drop that is. That was last calendar year. Peaked in August, bottomed out in December, January time. So yeah, funny that Apple has such influence and such power that just by putting out a paragraph press release to Bloomberg that they're working on ChatGPT with no real great advantage, that they can add $60 billion to the value of their company that quickly. So, okay. Here's a little dramatic update for those of you who weren't aware. AT&T is going to have some really interesting developments on what they're going to have to do as a company soon, because they have had this new development where I believe it's in the Pacific Northwest. They found that the AT&T cable lines that are going all across the country have a lot of lead, and it could be potentially hazardous to your health and the environment. So AT&T stock has been falling a lot, and people are kind of going on aside from the dividends you were paid, which we know AT&T pays a very nice dividend. AT&T is at a 29-year return to zero. That's right. It's trading at the same price it was in February 1994. So for those of you who are looking for a big fat dividend, very consistent dividend, or those of you who are already holding AT&T, it might be time to dollar cost average in. And but we'll see if they have to cut their dividend on this. Let's go here. Let's look at AT&T's financials just as a company. T. This is kind of what the financials. If somebody came to your office asking for investment, kind of sideways, not terrible. They're down 22% this calendar year. Net income is very wishy-washy. Their free cash flow is dropping off. Oh gosh, they even cut their dividends. But here, this is the one right here. Look at all that debt and where's their cash? And this is the kind of stuff that really concerns a lot of people when they think about where we are in the economy with interest rates rising. AT&T is such a debt-heavy company. For every, what do they have, $4 billion in cash and $128 billion in debt? That is unreal. So anyway, okay, let's get to some some earnings news. Earnings are going nuts. People are, you watch CNBC and it's every other guest. First guest will say, you get ready, hold on to your butts, earnings are going to go through the roof, it's going to be wild and crazy and beautiful. And then the next guest says, hold on to your butts, everybody's overestimating this. The economy hasn't improved, earnings are not going to get better, so on and so on. Well, you check this out here, and so far the negative earnings folks are winning that debate right now. So Netflix tumbles despite blowing away subscriber estimates as revenues miss, guidance disappoints. So if you remember this, Netflix, they started cracking down on passcode sharing for people who want to share a user account. Well, they added, how many did they add? They added millions of subscribers. And even with the new, they added more than 2 million new subscribers. But their revenues are still dropping and their profit margins are getting squeezed as well. So, I mean, did they have increase in revenue? Yeah, sure, but not nearly enough to justify where they are at the moment. So they also mentioned that this strike with Hollywood writers and so on could really be detrimental to their stock price. So Netflix is the first one to miss. Then we go to IBM. IBM Q2 earnings beat, revenue misses despite cloud demand. Ooh, what the heck just happened? Sorry. So IBM reported mixed second quarter 2023 results, wherein the bottom line beat the estimate, but the top line missed. However, the company witnessed healthy demand for hybrid cloud and AI solutions. So essentially, the same thing. Now, you guys keep in mind, in the world of the stock market, these guys, there are so many various tricks they can pull to make their quarterly earnings look good or tell a certain story. But what you can't really, well, I guess you can. You can strategically mess with your revenues. Maybe it's revenues depending on how you do your accounting. But anyhow, IBM has another miss. And let's see how, now that I've clicked on it, how is their stock today? Hey, they're actually up today. So here, check this out. Discover, like the credit card, gosh darn it, I did it again. I keep clicking this. They're down 16% today on a massive miss. Let's read this here. Shares in Discover Financial Services tumbled more than 13% in after-hours trading on Wednesday after its quarterly earnings fell short of expectations, and it announced a share repurchase pause as it investigates incorrect classification of credit card accounts around mid-2007. The company said it's deciding to pause share repurchase during its internal review. It said that back in 2007, it incorrectly classified certain credit card accounts in the highest merchant, blah, blah. All right, so a classification error. But again, a massive miss for them, unfortunately. They don't give a lot of insight as to why, other than just this internal thing, which could, you know what, it could blow up into a much bigger problem. But they didn't give too much insight on how are their consumers and their users doing. Primarily, they're down massively because, how do I get to, there we go. because of this big investigation and share repurchase pausing. Now, if you're going to repurchase your share buyback, that's going to affect your stock price increasing. Let's just check how their financials look here. So if you guys are looking to, as they say, buy the dip, okay, revenues look good, EBITDA looks decent, hey, free cash flow looks awesome, earnings per share look like they're going the right direction. Hey, looks like they're paying off a lot of debt and they're building cash. And look at those dividends; those growing dividends look really good. So actually, you know what, you guys, if this is something that's in your wheelhouse, Mastercard, Visa, Discover, this might actually be something that you would be interested in, to buy the dip, as they say. So that's their 5-year performance. I guess it's not that great, right? Kind of sideways. But you know what? You're going to have to decide. It's up to you. Um, Tesla shareholder update. Again, not great because, well, you know, we're going to go into the details on this one. It's kind of interesting. Tesla beats top and bottom line. They record revenues as their profit margins decline. So they had profit margins that kind of stunk. And let's just have a look at how they're doing right now. They are, okay, so they're getting beat up today because of this. So they have more revenue. They have adjusted earnings that are both increasing, and this is a record revenue for Tesla. However, they're losing on regulatory credits, those environmentally friendly credits, because they're making electric vehicles. The big thing, though, is that their profit margins are declining because of used cars and not just used cars. I shouldn't say that. It's specifically that they're lowering the price of their cars. So what does that mean? Well, let's just read exactly what Tesla has to say. They say here, in Q2, we produced a record number of vehicles thanks to ongoing ramps of our new factories and strong performance in China and Fremont, California. Cybertruck equipment install at Giga, Texas is in progress, with deliveries remaining on track to start. Yield of our in-house 4600 cell production line continues to increase, and we're building more capacity for production. Let's see, Model Y was the best-selling vehicle of any kind in the first half of year in Europe. Thank you to our European owners. Autonomy at scale is achieved by extremely large real-world data set, neutral net training, vehicle hardware, vehicle software, all of which we develop in-house, which is actually an incredible thing that they do. Very few people do that. It gives them a lot more control over cost and just how the product is made. So that's kind of what they're telling people. Let's see here. Okay, so that's about it right now for Tesla earnings. Their profit margins are shrinking a bit, but again, if we look, let's go here like we've been doing, and let's look at, just so you guys can have an idea. I'm not too concerned. It seems like when you look at the numbers here, revenue is exploding, EBITDA is exploding, free cash flow is going the right direction. All of these various data points, especially cash and debt, are looking really good. The one thing that doesn't look good here, shares outstanding. They're diluting shareholders a lot. In fact, in just over 10 years, they've gone from 760 million shares to 3.5 billion shares. So even as they are diluting shareholders, you can see stock price doesn't seem to care. They're exploding upwards. So let's continue with earnings here. Let me see here. Why did I even pull this up? So a lot of this demand in AI has been driving those top 7 stocks that we've been talking about all day. The NVIDIA, Microsoft, Google, Facebook, the rest of them. Here's a very interesting development specifically from Taiwan Semiconductor's press release they put out, earnings to shareholders. They said, and let me first read this tweet here. Zero Hedge says, the AI revolution is so powerful that Taiwan Semiconductor, the world's largest chip maker, which is the sole chip supplier for NVIDIA and the main supplier to Apple, Qualcomm, and AMD, reported its first revenue drop since 2019 and slashed guidance. It now expects full-year sales to decline by 10%. So then Zero Hedge quotes them, the chairman of the company. He says, quote, the short-term frenzy about the AI demand definitely cannot extrapolate for the long term. Neither can we predict the near future, meaning next year, how the sudden demand will continue or flatten out. So what in the world? It sounds pretty straightforward to me. that the people in charge here, I mean, one of the head chairmen of Taiwan Semi, who's providing all these chips, is saying this is not sustainable. This is not sustainable. With that said, TSM slashes guidance as AI boom fails to deliver. Not only that, though, check out this article. This is from a Taiwan Semi. Now, if you guys remember, they're building this massive, like, small city in Arizona, but they've had to postpone production and construction because they say that there is a shortage of skilled workers, and they're postponing the plant completion until 2025. They say here we are encountering certain challenges as there is insufficient amount of skilled workers with the specialized expertise required for equipment install in a semiconductor grade facility. That is unreal. We expect the production schedule to process technology to be pushed out to 2025. Um, he also says here it's all about macroeconomics. In fact, higher inflation and interest rates impact demand in all market segments in every region in the world. China's economic recovery is also slower than we expected. So you're probably thinking to yourself, well, if that's all the case, and that's not like they just got caught off guard on that, how in the world did this get to this point where they agreed to build such a massive small city in Arizona and all that stuff? Well, my friends, never underestimate the side effects and the unintended consequences of government spending. That was all because of the Biden administration's move to bolster America's supply chain for next generation computer chips by increasing domestic production through the Chips and Science Act. Now, of all the things that we can complain about government, and there's plenty of them, and even though most of us hate this crazy spending, this one at least was decent in the sense that that the Chips Act just literally threw money at these tech companies to come and build these factories in America. There are plenty of other factories across the country being built. This just happens to be the biggest one, and it looks like that we threw a little too much money at the idea, and we simply do not have, like I said, they can't find enough skilled workers to make this thing happen. But regardless, it will get finished. So, Taiwan Semiconductor. Let's have a look at TSM today. Down 4.5% on this news. And just for those of you who'd like to see kind of how TSM looks as a company, very attractive. Again, revenue going up, EBITDA going up, free cash flow, net income, earnings per share. Again, ton of cash on hand. Dividends, not so great. Shares, okay, at least they're not diluting. But great return on capital here. What's that, 27, 28% essentially. I will say there's one thing you need to know. Remember we talked about this a couple of episodes ago. Warren Buffett's Berkshire sells 100% of stake in Taiwan Semi, and if you remember, there was an interview where Warren Buffett was essentially caught off guard. The interviewer asked, "Okay, so tell me, why did you sell 100% of your Taiwan without even telling anybody or anything? Usually, you don't do that." And the guy just completely starts blah, 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 stuttering, and he doesn't know what to say. And then he kind of fumbles a couple sentences out where he goes, "Oh, well, China and Taiwan, and you never know what geopolitics is going to have in store." And so anyhow, if those of you who want to buy some more Taiwan, you might just be patient right now. If Warren Buffett knows something, you may just be patient. So anyhow, let's continue on this AI stuff. I'm going to ignore that one for right now. Okay, I'm going to just do a rapid fire on Squawk Box. CNBC Squawk Box is a really good Twitter to follow. They post a lot of cool 2-3 minute video clips of various things. So I'm going to hit refresh, and we'll just see if there's any new earnings tweets, and we'll just do a little rapid fire on some earnings. So United Airlines, they beat their earnings. They said, "We are the only airline in the world that didn't retire wide-body aircraft. I wish we had even more," said the CEO. "The international environment is so strong, and the supply constraints are so big and so long-lasting for our competitors." So United Airlines, they're up today, but I know that some of their fellow airline stocks are not doing very well. They were missing upside down. Let's see here. There's a lot of drama regarding the Ripple and stuff being approved. Here, Netflix let a problem grow with 100 million viewers around the globe, taking the product line for free. They finally started to crack down. They got a lot more subs out of that than people thought they would. The churn for the other services is much bigger. much higher than Netflix. Let me see. Yeah, here's some other earnings. BX, which BX is BlackRock, they fell short of estimates. Let me type in BlackRock earnings. Here we go. We'll add that to what we're about to talk about with banks here in a second. Was it? What is it? Horton. It's the Canadian convenience store, Canadian grocery store. DL Horton. Demand or DR. There you go. DR Horton. They're up. Things are looking good for them. American Airlines raising its 2023 profit forecast after strong second quarter. So United and American are having a good quarter. There were a couple others. Johnson & Johnson is out with earnings results, beating expectations and hiking full year guidance as their medical tech sales are growing. They say here, Americans feel like they're paying for innovation for the rest of the world. No citizens of any country pay more than Americans than they pay for drugs. How do you address that? And I'm not gonna play because he just kind of flounders around if you listen to him. Let's see, Netflix. We already saw that one. Okay, we'll continue. Interactive Brokers, that's stock financial markets trading. They fell short on profit estimates, which is surprising considering the market has just exploded upwards. But okay, let's cover what the heck is going on in this Ukraine-Russia drama, and specifically how that's going to affect wheat prices and other commodity prices. So here's the deal, you guys. The Ukraine-Russia drama is essentially at a stalemate. The Western countries keep sending Ukraine all these various more and more powerful weapons, but they're not making much progress at all. It's essentially a stalemate on the Eastern Front. And essentially, from what I can tell and what I see on Twitter, they will make an offensive. It makes a little bit of progress. Russia kind of backs up a bit, lets them in, and then just kind of swamps them. And it seems like Russia has an unlimited amount of weapons because they have the capacity. With that said, though, what's going on now is what was 9 months ago or so, Russia said, all right, look, the world needs to eat. We're not trying to starve the world. And everybody knows that Russia and Ukraine, but specifically Ukraine, supply dang near half the world's supply of wheat and grain. So here's what we'll do. While we're fighting with Ukraine, we will allow for Ukrainian ships to exit the Black Sea. Now, again, for those of you who aren't very geo up to date, Black Sea. Let's have a look at what's going on here exactly. All right, so this is the Black Sea. You can tell this is Ukraine right here. This is Russia right here. And this is the part that Russia has now taken back a few years back during the Obama years. They took this area here back from Ukraine. So you've got all of this area that's up in contest, and this is what they're fighting over. So Russia says, all right, look, we'll let you transport your grain. Just leave us alone and don't do anything crazy down there, and the world can eat. Well, if you guys saw a couple days ago, Russia's this area right here, Crimea, the bridge to Crimea. Now, I'm going to be honest with you guys. I'm not sure if the bridge is up here on the north part or if it's on the east part. I'm going to guess it's right here on the east part, this bridge. But I could be wrong. Regardless, this bridge got blown up with essentially an underwater submarine, like an underwater drone that had a bomb attached to it. So Russia says, all right, fine, no more grain. They have now said that anybody who is leaving the Ukrainian ports will be potentially recognized as a military, what would you call it? A military craft, a hostile military activity, and they may attack and sink that ship, even if it is just, it could just be the Red Cross, okay? It could be the Red Cross with medical supplies or grain or whatever, but Russia has said, all right, fine, we had a deal, it's over with. And so who's going to be affected are countries like Egypt and Kenya and other countries that do not have easy access. This lady on Twitter, you guys, I have no idea who this lady is. She's got 280,000 followers, but she actually has a pretty cool and a pretty legitimate update on what's going on here. She says, for those that have not been following this story on the Russia grain deal, I'll attempt to put it in the easiest terms / timeline. The current deal, which allows Ukraine to export grain through the Black Sea, is set to expire on Monday. The current deal, which was brokered by the UN and Turkey last July and has been extended 3 times. Russia said no extension this time, blaming the West for blocking its exports as a result of restrictions on payments, logistics, and insurance. The United Nations asked Putin to extend the Black Sea grain deal in return for SWIFT access, which is just global banking access. The UN is still waiting on a reply for Russia as of today. However, okay, now hold on. This could affect broad range of commodities, including fertilizer, if a resolution does not come to fruition by Monday. Okay, so that seems pretty straightforward, right? Look, Russia, let's just keep being friends on this front. We can keep the Ukraine-Russia, war, fight, whatever. We'll put that aside, but let's not let the world go hungry. The United Nations is asking, Turkey is asking, all these other countries are asking. That was on like a Friday. And as Russia is sitting there thinking about it, then a bomb blows up on a Russian bridge. Now, what in the world? If they really want them to extend this deal and they're going to give them access to the global banking system, also insurance companies are pulling out of Russia over this. That was part of the deal, was these global insurance companies could continue to insure various Russian assets, whether it was government or private companies. All of a sudden, a bomb blows up on the bridge. Don't tell me that's coincidence. Just like the pipeline blowing up a few months ago. And so here we go. Now the bomb is blown up, the bridge is destroyed, wheat prices jump higher as Ukraine threatens retaliation against ships going to Russian ports. So, as if it wasn't enough that initially Russia says, somebody just bombed our bridge, we're pulling out of the deal, we will recognize Ukrainian ships and Ukrainian ports as potential military. Now you've got the Ukrainians replying with the same threat, only increasing the threat, saying, hey, you know what? Anybody going to Russian ports is going to be looked at as potential military hostile. So this is only getting hotter and hotter. And then it says right here, Russian military confirms as of July 20th, which is right now, ships traveling through the Black Sea to the ports of Ukraine will be considered carriers of military cargo. So this is, and then also this is a very important thing. You can tell words matter. A few minutes later, they updated their initial report saying it now says it will be considered as potential carriers of military cargo. So again, as if things weren't getting bad, if things weren't bad enough, now we've got Ukraine and Russia both openly saying, fine, any ship that I see in the Black Sea that looks like it might be coming or going to your port, we're going to consider those military and we might attack them. So yeah, now we're watching wheat prices start to increase and various grain prices. Let me see if I can show you kind of a chart here. Yeah, so this is kind of an ugly chart, but you can see on the right side there, that green circle, that is wheat prices spiking about 690, about 690 was I'm assuming bushel, 690 a bushel up to 730. So that's almost a 10% jump right there just in a matter of minutes. So we will see what in the world happens there. Hopefully nothing terrible, but it's been terrible since the beginning, so I really don't expect it to be less terrible, but time will tell. All right, so let's move on. Crypto, you guys. I have to start it off right here. Let me get this in order before I even go forward. It's unreal and awesome at the same time. Awesome in the sense that you're sitting here watching it and you go, oh my gosh, no way. Yes, no way. Yep. No. Oh, okay. So Binance is the last strong crypto exchange in the world right now that essentially hasn't gotten a major attack on it. In the last year, you've had FTX go insolvent. You've had the SEC fighting with Coinbase. You've had Gemini and dollar currency. What is it? DCG, Dollar Currency Group? Digital Currency Group, fighting each other. Gemini is allegedly upside down by like $1 billion or something like that because of DCG. And Binance out of China has been the last one to really hold it together. But even then, and you guys, if you're interested, without doubt, Bitfinex, this is the best crypto Twitter account you need to be following. I've been following them for probably 10 years. They're constantly showing the best stuff to show all the fraud happening in the crypto world right now. And I hate it because I love crypto, But regardless, you got to be honest with yourself. There is a ton of fraud. So here's what's happened. Check this tweet out from Meet Kevin. Binance in the last 30 days. General counsel quit. Chief strategy officer quit. Head of investigations quit. Senior vice president of compliance quit. Dozens more laid off without reason. Justice Department closing in on CEO, and the CEO is currently hiding in Dubai. I recommend reading Bankruptcy for Dummies to the CEO, CZ. This is unbelievable. There's been massive speculation for months that because of the FTX stuff, because of a lot of the crypto fraud, that Coinbase has been essentially committing massive internal fraud to keep the music going on the musical chairs type of a thing. Um, Another development in the last couple of days: breaking. Binance, the giant crypto exchange, is cutting a big chunk of its workforce as it grapples with federal investigations and regulatory crackdowns in the U.S. and abroad that could radically diminish its business. Over 1,000 people have been fired in recent weeks, according to a person familiar with the moves. The exercise, which is continuing, could result in Binance. Excuse me. Regardless, so the DOJ is going full blast, trying to hit up Binance US, and then which will bleed into Binance China, which is the global exchange. And there's other agencies. Gosh, what are the others? I forget at the moment. But there are other agencies currently investigating and serving papers to Binance. And now, with all that said, as if things weren't bad enough, Tether on Binance US is collapsing. Now, imagine you guys went to the ATM and you said, "Hey, I need to pull out $100," and the ATM said, "Oh, just so you know, your $100, we'll give you 70 because it's only worth 70 now." That's essentially what's going on these exchanges, on Binance US specifically, is that the stable coin, the money market, the US peg, the US dollar peg. This is what happens when either one of two things happen. Either there's a massive run on the bank and there are far, far, far more sellers than buyers, or you have a fraud happening. Now, I'm not sure what, I think it's actually recovered since this tweet from a few days ago. Yeah, 5 days ago. I think it's recovered, but this is just about the biggest red flag. It's even bigger red flag than this. It's a bigger red flag than this. When your one stable coin, your US dollar peg, has dropped by 30 cents or 30%, you have a massive problem. So to finish this off, it's getting even worse. This was from a few days ago as well, and this is Bitfinex saying, "Get your money out of Binance US immediately. This is the biggest red flag I've ever seen." He says, "Don't worry, if you miss your chance at losing money on Binance US, you'll get another opportunity to lose your money on Binance." And essentially what Bitfinex and all these other people are saying is, get your money off of these exchanges, put it on a hard wallet, put it on a cold wallet, whatever, but do not leave your coins on these exchanges. Or if things continue to get worse, which, going back to this right here, it definitely looks like it's going to get worse. So time will tell, but this one story has continued to develop just the way that we have been saying for 12 months now. And this is, again, let me be clear, this is coming from somebody who loves crypto. But unfortunately, there's just so much fraud right now in the world of crypto. I don't see too many people being honest about that fraud. So, okay, last article that we're going to do here, back to earnings. Let's talk specifically about an entire sector, the banking sector of earnings. So we went into to earnings season. Banking sector usually always reports first. They'll report, then you get a lot of retail, consumer, discretionary, and then you'll usually get tech after that. And that's usually like a 3.5 week window. So first week here, we got banks. Banks, how did it go? Okay, so the morning of reporting, banks announced, "Hey, things look good. We're pretty happy with how everything looks." And all of their stocks popped like 3-4% right at the go, right pre-market, boom, up 3-4%. That was JP Morgan, Citi, Wells Fargo, all those guys. Then what happened? Then all of the analysts and people like you and me got a chance to actually read their financials. And my goodness, the stocks fell and finished the day down 1-2%. Now, why did that happen? Well, here's a killer tweet that pulls apart every single thing that happened on the earnings day a couple of days ago. Banking crisis update. Essentially, here's what's happening. Were their revenues up? Yeah, they were up a bit, mainly because JP Morgan inherited all of the assets of First Republic, who went insolvent a few months ago, and none of the debt. But with that said, what's happening is that all of their fixed assets that were already underwater, the very reason that First Republic, Silicon Valley, those guys all went under, the numbers are getting far worse. We did a video on this for Bank of America like a week ago, but let me read this to you because this is all pulled right from their own reports that they have put out to clients right here. And I mean, let me just show it to you. Here is Citigroup's quarterly financial report. Here's JP Morgan's earnings financial report. Here's Wells Fargo. What I'm about to read to you is pulled right from those three documents. So he says here, the bank's reporting season has begun, and of course, JP Morgan, Citi, Wells Fargo all beat expectations, sending their stocks higher pre-market. However, when people started moving from reading the cheerful press releases to the boring and lengthy financial statements, bank stocks quickly pared their gains, and BKX closed down, which is a bank ETF, closed down 2.5% on Friday. What the hell did investors find in the financials that caused such a change of heart? Here are interesting things I've found so far. 1. JP Morgan's fair value loss on their hold to maturity debt securities book increased to $33 billion. And no, here First Republic has nothing to do with it. So when I say HTM debt securities, that's just the assets they hold to counter out all of the liabilities they have. I've had to explain this a lot. When you go to a bank and you put 100,000 in, that's actually a liability for the bank because they have to pay you interest. Therefore, they need to hold something back internally that will pay them a little bit of interest so that they can cover your deposits. And what they're saying here is that stuff that they hold back, that safe stuff, it's gotten so toxic and rotten that he's about to describe how this is happening to all of them. So JP Morgan's safety net has gotten more toxic by 33 billion, up to 33 billion total. 2, JP Morgan lost 900 million in their securities investments. What's wrong with this? These are peanuts for Jamie. What's wrong is that this is the 4th quarter in a row JP Morgan books a $900 million loss despite the ups and downs in the market. That's a bit too regular, isn't it? However, if we compare this figure with the decrease in the HTM balance quarter over quarter, JP Morgan has been selling those safety net securities at 37.5% and 20% discounts all year and the end of last year. This is starting to become more aligned with the swings in the market, isn't it? Part 3. Now look at point 1 and 2 together. Do you notice anything strange? JP Morgan estimates a fair value of their HTM securities only 8% below book value, but the price they've been selling their HTM assets is at a 30% discount. If we apply MTM, which is mark-to-market, to HTM assets using what the bank itself is getting from the market, JPM is carrying a $123 billion loss on their safety net assets. This is right in line with what we talked about last week on Bank of America. Bank of America was describing something very, very similar. They're at about just over 100 billion in losses. Now, fortunately, they're not realizing them at the moment, but if there was a run on those banks would go insolvent just like the rest have. Part 4. While at least JP Morgan still shares important data wisely hidden in the various footnotes, Citi and Wells Fargo don't bother to do so. However, from what they cannot avoid disclosing, we can easily see how both banks really push limits in terms of accounting acrobatics this time around. For example, yesterday I flagged Wells Fargo reported a $4 million gain for Q2 of this year related to their debt securities. Citibank did even better, looking at a $49 million gain. Both banks hold $500 billion of debt securities, and they're doing far better than Jamie is managing them. Yes, if you believe in Santa and unicorns. However, if you apply the same 30% discounted value Jamie is getting to Citi and Wells Fargo, both banks might be hiding about $150 billion in losses each in their debt securities, those safety net securities books. What about credit losses? While JP Morgan and Wells Fargo increased their provisions by 28 and 40%, Citi provisions decreased by 8%. Come on, Jane. However, none of these three banks still made any meaningful provision against their commercial real estate. Among them, I find Wells Fargo assessment is the funniest one. Quote, the vast majority of Portfolio is institutional quality and with high caliber sponsors. So what? Are those commercial real estate loans guaranteed? No. Is institutional quality reassuring when filings for Chapter 11 are at Great Financial Crisis 2008 levels? No. So basically, Wells Fargo is telling us that $100 billion of commercial real estate loans they hold are, quote, good because they say so. Lastly, but not least, deposits at JP Morgan, including First Republic, 21 billion versus a loss of 11 billion for Citi and a loss of 9 billion for Wells Fargo. According to Fed non-adjusted data, large U.S. domestic banks as a whole lost 150 billion in deposits in Q2. Then if the net for the first three banks that reported is a plus 2 billion, it means the remaining out there lost 154 billion in deposits, right? Someone might have been bleeding big time then. So he finishes. He says, considering all that has been said so far, no wonder investors started dumping bank stocks yesterday. The bank ETF is down 20% year to date versus the QQQ up 40%. This is the equivalent of an F1 car leading a race without fuel. It's simply not possible for a car to keep racing without fuel unless you're playing a video game. Believing that you can do it in reality is equivalent to believing in Santa. If this is the beginning of the bank's reporting season, I foresee plenty of games and smoke and mirrors along with nasty surprises ahead, and not only for bank stocks. Well, my friends, what has happened since this was put out? Also, if you want to, this guy does another update that actually goes into even more detail. He finds even more mind-blowing data. He put this out just 5 days ago. So what's happened since then? Well, Bank of America is bleeding. Bank of America says one of the most important figures in Bank of America's second quarter earnings report Tuesday likely won't be included in its main press release. It's the size of the company's loss on huge bond portfolio, that safety net, will probably be tucked into the financial supplement. The portfolio of so-called held-to-maturity securities, which totaled $625 billion at the end of March, showed a loss of $99 billion. The loss reflects the drop in the bond market since that debt, mostly mortgage securities, was purchased, blah, blah, blah. Okay, so Bank of America is joining the party. What else? Did anything else meaningful happen? Oh, Goldman Sachs says, hey, things are looking good, but our profits did plunge by 58% in the last 3 months. Leash. Anything else happen notably? Oh, BlackRock. Wait a second. BlackRock? Yes. BlackRock had their earnings. BlackRock, the world's biggest asset manager, handedly beat second quarter profit estimates, but showed a slowdown in money inflows, sending shares down about 2%. Now, this was just this morning, and I haven't seen anybody on Twitter had a chance. In fact, let's just check real quick. BLK. Let's do this. See if anybody has gotten that same type of insight. BLK. So this guy said, okay, I'm not going to make you sit here while I do this, but essentially this is happening across the board where these banks are watching watching the value of everything they have start to completely collapse. And then just a little cherry on top.
Well, we've got uncertain economic conditions that you talked about, heavy debt loads, and that's contributed to the highest level of bankruptcies in 13 years. In the first half of this year, 340 U.S. firms filed for bankruptcy, with the majority in consumer discretionary, healthcare, and industrials. Serta Simmons, Silicon Valley Bank, Bed Bath & Beyond.
So I'm going to pause that there. I won't make you watch the whole 2 minutes. It's a good little 2-minute clip, though. So just curious, what do you guys think What do you guys think happens to these banks' balance sheets when these various companies go bankrupt? Well, they wipe that debt clean. So what happens to those banks? Those banks are going to have to sell more of those safety net assets to make good on those bad debts that just got wiped clean. So what's going to happen? I have no clue, but it doesn't look good. People were talking about how amazing earnings are supposed to be, and it seems that the more time people have to just go slowly through these financials, these right here, it's the documents they're releasing to the public. When people are combing through this stuff, they're finding, oh my God, this is bad and getting worse and worse. So anyway, you guys, I am going to end it right there for you. Let me just check the stream, see if we've got anything that, let me check this. No, okay. Now that's all I got for you right now, y'all. I'm gonna let you get back to your day. I hope you guys found something interesting in this. But that's all I got for you right now. Take care. Nice to see you. And I'm going to pull this back open as we close this out. All right, y'all. Until next time.